Good evening, everybody, and welcome to a slightly alternative twist to the usual Wizard Wednesdays. Now, I hope you're having a good week so far. This is one of my favorite days of the week versus Sundays as well, where, of course, the podcasts are also provided for you all. Now, I want to jump straight into this one with a bit of a different approach. The first thing I'll be doing is covering BCC first, as that is the current long trade I have posted in the Telegram. And of course, that is the only real trade that's running for myself right now, as we are seeing a bit of confusion upon the Ether and XRP charts in particular. And as for the altcoins, we are not really seeing a significant inverse correlation to really be covering all of them anyway. And I've decided that it's so easy, and any single person really, although they may not understand true technical analysis, it's fairly easy for someone to just provide technical analysis for all of these pairs, and then that's it, done. And I wanted to actually educate you guys instead this time. And not only that, as we are providing so much content, well, as I am providing so much content on a consistent basis in the Telegram, especially with the chart work, and even on Twitter or even in the Telegram, whatever it could be, I want you guys to be more in sync with how I'm moving. Now, we did touch on that slightly in the prior episode. However, I want to dedicate this episode to a more constricted and overall presented approach to technical analysis, so to speak. I want to provide potentially different insights, different ways that I analyze, and just little tips and tricks that differ from the crypto market to the forex and stock market, and just little ways to analyze the charts a bit different to other people, and hopefully aid you in viewing the markets the same way I do. Now, I will actually be throwing in one of the lessons as well, technically from the new Crypto Wizard course, and please remember this is only the surface level of all the content I'll be covering in the course. However, I do feel it's good to share even some of the basics, which are potentially even advanced compared to some of the analysis you may have seen out there. So again, it's simplicity, but also just a different approach. So the first thing we'll do is look at this BTC chart. Horrific mess up from me. BTC chart over here. Now, the first thing I'm looking at is this $5,350 level that needs to be broken. I'm desperately awaiting a breakout of this zone. As covered yesterday in the prior breakout, we can then project around 5,500 and then hopefully exceed to that $6,000 level as well. So not too much to cover on this, just a little update in terms of we are awaiting a breakout to, of course, assist with a higher climb to the upside. But in saying that, as you know, my stop loss has been moved significantly in profit, should be around this region. Let's just have a quick look at where that is right now. Looking pretty good, to be honest with you. I mean, we are now broken through this resistance level of around $5,285. Now, looking at this on the 4 hour, we've broken above, it's currently holding. We have snapped through this prior high as well. However, we have not breached the wick just yet. So we are needing the wick to be broken realistically around this level as well, just around there. And then, as you can see as well, I've got some trades running. And again, this is just an account I'm actually using for the course sake. So just experimenting with different trade setups and just recording it, documenting for the course. Nothing significant. I wanted to keep it fairly realistic alongside a much smaller account as well that's running on the side. So again, I didn't really want to show this. I don't know why I was hiding it in the prior videos, but I don't really have any shame in, just showing this account. It's not about having a 500k account, it's about having a more realistic account for the everyday person as well. So just got a few trades running, of course, a bit of forex and indices and whatever you like as well, some commodities running and energy, blah blah blah. However, overall we are looking at this trade, it's in $2,265 profit. I bought there one lot, and we have this trade here as well, around $1,000 profit. What I might do, just because we are slowly climbing higher, is increase that to around $1,400 profit overall, and keeping this trend line into consideration, that is actually a bad idea. I will take that back down to there and just keep it a little bit higher than expected, because although we are anticipating a breakout and the daily candle is looking great, if I just zoom in, you can see the wick has slightly inclined higher, something we'll be touching upon very soon in the remainder of this video. So as of now, there is a lot of volatility and a lot of mess on this 1 hour time frame, which I'm not really liking too much right now, especially when you see the facts that we've breached above, we've rejected, we've spiked. I would like to see this close at least fairly bullish to signify a climb higher. However, with this green candle here and a huge attempt to break out higher, I do believe that is a good sign. So looking at the 15-minute time frame, although this looks extremely bearish, I believe this may be a potential trap, and I really hope it is, as we have seen similar movement movements like this before, as you can see, where as long as the candle ideally closes bullish with a huge wick, you may be able to see an incline higher. So going back to the longer term time frames, they're looking much more promising, which is why we focus on these time frames and hopefully await a fairly good green bullish breakout to the upside. Now, the reason why my stop loss is so tight, as covered in the prior video, is because of the extended period of time I've been holding this trade. It hasn't been too long, but has been held from around this region, I believe, or somewhere around here. So it has been a few days and almost a week, and I'm just getting a bit bored now. I do like to at least secure some profits. And going back to the charts over here on the Brave browser, by the way, an incredible browser that I have not returned back from ever since. It was honestly the best thing ever in terms of privacy, in terms of it's even got the Tor browser features implemented like DuckDuckGo. I absolutely love the Brave browser. I haven't actually registered with it or anything yet, but I may do so in the near future and start claiming those beautiful rewards for viewing ads. But looking at this trend line overall, as you can see, we are in an overall green market. We are slowly increasing higher over on a daily basis, so we just need to break through this region now and we're pretty clear. But I believe there are times where I'm getting too conflicted with the long-term targets and not really counteracting the downside. So just to warn you guys, as I did in the prior video, there are support levels and trend lines in play over here where we could see similar spikes like this one here, and of course a potential one here before actually rocketing higher. And that could be the first trend line, or it could fall down to this trend line around $5,100 or potentially even higher. So I have these two in consideration for a potential downside spike. However, the reason the stop loss is in profit, as I have already covered, is because if price falls down, I've secured profit from that original move anyway. I will simply re-enter upon a test here or a test here with a slightly bigger position to ride the same wave up again. Because as long as price spikes immediately to this level, it is still valid for a climb higher and a rally higher. So overall, it's still looking very promising. You hopefully have seen the BitMEX chart as well I posted on Twitter, which is looking more promising than ever. But what we're going to do is remove all drawing tools once again, and instead of analyzing all of the pairs all together from fresh, let's just analyze BTC. It's been one of the longest, well, it is the longest standing crypto. It has the most price action to actually come from, hence how we were able to potentially predict future price movements from this as well. Now, one thing I want to cover as well is the weekly candle first of all. So as you know, there can be times where the weekly candle can correct 25 to 50% of the prior week's candle before rocketing or falling in the original trend direction. As you can see here, we have already pulled back slightly and we've already pulled higher, signifying what could be a very similar movement to this or this here, where the candle just slightly pulls back, even here, very gently taps a bit lower, and then boom, rockets to the upside. Bearing in mind it tapped the 5,200 support level before pulling back higher as well, is a very promising sign. We will see that drive straight to that 6,000 barrier just up there as well. So what we're going to do is start from a top-down analysis perspective, and I know this was covered in the prior video. However, I want to do this fresh and just throw in some little tips and tricks, gaining the overall market trend and just teaching you guys a bit more about how crypto analysis works. Even little things like Fibonacci. I do believe I've been hiding even Fibonacci levels until the prior video, and I just think that's so stupid because everybody knows about the Fibonacci tool. And again, I won't be digging into my moving average strategies, etc., as that is all for the course. I've been working on many new different strategies for the moving averages as well, but I think the basics and dipping into a few of the course elements are pretty crucial. And again, there's many new people in this market, and I do believe everybody deserves to have even the basics of cryptocurrency analysis under their belts. Now, I'm not sure if I'm just seeing things here, but that looks pretty interesting as well. 1, 2, 3, tapped, broken above. That could be a very nice little tool as well to use there. On top of that, we also have this, which was covered in one of the videos, that retest that's needed there. Hence why I believe this could spike up to around 6,400 if we just break through that really annoying resistance region just there. We have a nice confluence up there as well for a trendline retest, and we've broken from the downside there. So what you will also be realizing and seeing throughout this video is when I am polluting my charts with a lot of analysis, what we then do from that point after covering all these different angles is just stripping the charts clean and using pretty much support and resistance levels to predict these key levels instead. So we'll be going from trend lines to Fibonacci's to covering even the candlesticks themselves. And then from there, you pretty much strip the charts completely clean, go back to support and resistance, and keep your key levels in mind. So the first thing we do is go to the monthly. Again, top-down analysis, very basic stuff, but we want to be covering all elements of the chart. And again, what I like to do is normally the rule of 3. 3 is the magic number, as they say, and I do believe this applies for the charts as well. So what we would do is basically find the I consider this a house, so to speak. I consider the resistance, the roof, I consider the support, the floor, and I consider any levels in between for an intraday or intraday basis as almost the floors of a house. So essentially, I construct a house within my charts. So let's start by building the floor, a price which is the roof, which is just above where the current price action is. Remember, you do not want to be drawing levels all the way up here because it's not very necessary right now. You don't want to be plotting up here because it's not relevant to the current price action. If you're long-term trading or long-term investing or swing trading for, let's just say, several weeks, then by all means use what you are being taught here and apply that to a longer-term strategy. However, when we are focusing on short to, I guess you could say, medium-term trades in particular, or swings in the market, it's not very necessary to be drawing lines up here and plotting a $15,000 retracement, for example. So let's just focus on the first steps. I will get rid of, again, Wizard Purple, keep this theme nice and clean. The first thing I see here on the monthly candlestick time frame, sorry, that was a mess up. We have 1, 2 candle bodies closing exactly at the same level with identical wicks, showing a massively significant level of support around $3,500, and to be precise, $3,500 on the dot to the absolute T. That alone, especially in the current price action region. So when I say current price action, I essentially mean anywhere from around here to there. I can even push that lower. So basically, an intermediary price should approximately be in the middle of where it's currently trading. So from the whole box, it should be around that region, and then from there we can work onwards. So plotting the first support level, very simple. You do not need to be doing all this stuff all the way over there. It's very long, it's very unnecessary, because once you dip down to the lower time frames, you want to be able to easily adjust these key levels. So what I'll be doing is plotting this here. And again, remember, these will always be adjusted once we dip down to the lower time frames anyway. So it's up to you how you want to do these. You can either extend them out slightly, and you can continue them from where prior price action may have been caused. For example, here, where all of the wicks accumulated, you could extend it out from there, or you could create almost a balancing plate. The way I see it, the floor is almost a floating floor. So we have a support level just there on a monthly perspective. 1, 2, 3 candles, more than enough confluences for me to be confident in that. Now, making this very simple, simply Control C or Command C and V and duplicate this key level. As we can see on the upper end, we have the $6,000 region here. We can extend this realistically up to that level there, which I think is more fitting, especially for where we currently are. And using this, although we have the wicks here, something I'll be getting into shortly, the candle bodies for me on the monthly time frame are way more significant than the wicks themselves, as the wicks are usually showing volatility that's occurring on the daily and weekly time frames versus the monthly. So the monthly candle closures are absolutely significant because it shows you that price is being manipulated and driven towards certain levels on a consistent monthly basis. And then from what's going on an intraday perspective is very different. So looking at how this closes right now, we have $6,000 just there. How is that looking? It looks great with the wicks. However, the bodies are all occurring over here. 1, 2, 3, 4, 5, 6, 7, essentially all occurring at this region. Because it starts from there, I will actually extend this out from there just for visibility purposes right now. And if you want to keep your charts clean, you may notice that their candles are a bit faded because the box has been driven over them. All you do is right click the box, visual order, center back. The charts are now, or the candles, sorry, are now on top of the actual support and resistance zones. I'll do this again, center back, nice and clean. Now they're acting as technical levels that are occurring in the background versus overlaying your actual candlesticks, which I believe just makes things a little bit cleaner. So dragging that there, nice and precise. What we will do now is pretty much we have formed the floor, which for the sake of this video, I will label the floor. This is the floor of our house. We now copy this, and we create the roof of our house. We have the floor, We have the roof. Now, when you have houses, they normally have ladders and they have floors. Depending on how wealthy you may be or where you live in certain areas or demographics, you will have several floors in your house. This can also be said for the cryptocurrency market. So all we'll do now is dip down to the weekly time frame and have a look first of all at if these levels are actually holding up very well with where we've drawn them on the monthly. If not, they can be adjusted later. However, looking at this right now, you see there's a few wicks underneath. The candle bodies have closed just below where I've highlighted, as you can see. So all you do, extend this over here, push this down ever so slightly to match up with these levels there. And as you can see, perfect candle closures now. One wick just there as well. 1, 2, 3, 4, 5. I wouldn't consider these perfect, but 6, 7, 8, 9, 10, and technically 11. And of course, on the upside as well, we have 1 perfecto, 2, 3, 4, 5, 6, 7, 8, 9. That for me is more than enough confluences to actually confirm this is a very valid level of support and resistance. Now, when people look at support and resistance, I always find using these, I guess you could say even technical analysis overall, I try and combine it and try and use real life ideologies and terminologies to help aid how I'm actually viewing the chart. So for example, viewing this as a roof, I view this as almost a person, I guess you could say, inside a house that's trying to break through the roof of a house. The same way I see someone on the floor trying to dig into the floor and break lower. And what you have to realize is what you are seeing in these candlesticks, these are not just candlesticks. These are driven by human emotion, greed, hunger, anger, happiness, overwhelming joy. Like, there are so many emotions that are being felt when you are trading the markets, and especially the crypto market with all this volatility. You have to realize that human emotions and the greed of Wall Street, for example, all of that is implemented within the candlesticks themselves. The fundamental news announcements, all of that stuff is already factored into price. And I believe many people do not realize this. They're looking at charts all day, they're looking at candlestick patterns, but you have to realize technical analysis has essentially become a self-fulfilling prophecy, because all of us as humans, with all of our emotions combined, are viewing these same levels, and greed might kick in here, causing a bigger pump. Why has it caused a bigger pump? Because it's broken out of a key level. We're all looking at the same things, hence why they become self-fulfilling prophecies. And it goes for Fibonacci. Fibonacci is found in all aspects of life. I'm talking in shells, sunflowers. It is found everywhere in the world. The Fibonacci golden ratios, we'll be getting into that shortly as well. But why would it realistically work so well on the forex market, stock market, and crypto market? Because we are all viewing these same levels, and because we've been taught even the basics of any kind of technical analysis, because we're taught the basics of trend lines, support and resistance, even the most amateur of traders. And remember, the aim of the game is to wipe out the average retail trader. The goal is for you to lose, so the institutions and the big boys win. The more losers, the more the bigger banks, etc. win. So the goal is to basically find these formations. And what happens now is, because they're self-fulfilling prophecies, let's just say a trend line here. That trend line is located just above. They know every average trader will have a trend line drawn like this. If not, the amateur trader will have a trend line drawn like this. And they are looking to entice price to these levels, potentially enticing you to see this and think, oh my God, a trend line, it's going to reverse. Bang, it breaks through and excels higher. So what I've realized is viewing this as a institutional investor, the aim of the game is to almost essentially trap yourself. The way I trade now and the way my trading has necessarily bolstered tenfold is because when I analyze the charts, I overlook them first. And let's just say I do a quick rough drawing like this before I actually place a trade. And of course, you'll never win 100%. And I'll throw that in as well, guys. If anybody tells you that you can honestly have a week or 2 weeks worth of losing streaks, you can still be profitable at the end of the month. That's why when I have 4 losses in a row, or even if I have 1 loss, or even a week's worth of losses, I never fret, because I always look at the longer term picture. And for me, it's like, if I lose 7 trades in a row this week, but then I have 2 weeks of successful trades that not only bring back my losses but also put me into a profit, I'm still a winner. Some of the most successful traders in the world actually lose more than they win, but the wins are always significant. And again, if you view that onto your technical analysis as well, you realize that you take more of a logical approach to your trading. So for example, if you're aiming to trap yourself in trading, you look at all these setups and you think, is this too easy? Is every other trader looking at this exact setup? Are they all looking to potentially catch this same move. And if it looks too textbook and too easy, guys, that's how I caught the break of $6,000. Everybody was asking me, how on earth would you know that BTC would break $6,000? Because it's too easy. Human psychology. I use forums. I use Reddit in particular. I love going on the cryptocurrency subreddit and just looking at the crazy amount of stupidity that lurks in there, and I use that in my favor. There are so many ways you can look at what the average person does. They say 95 to even 99% of traders fail. Well, guess what? You have to look at what 99% of the population are doing and just do the opposite. The wolf versus sheep theory is not a myth. This is real, and it definitely occurs into trading as well. So I just wanted to throw that out there. Bit of psychological advice as well. Now, where was I on this floor building mission? So we have the roof, we have the floor. How is the floor holding up with prior price action if we extend that out? Well, would you look at that? We have a perfect tap there. And we now have 1, 2, 3 perfect taps of support just there as well. A little bit of a break down below. Guys, if you want to make it easy for yourself, you can draw zones like this, which are more than valid and acceptable in the crypto market. And do you know what we'll do for this sake? We'll drag this even lower to match up with even more of those confluences, because it's not about precision in the crypto market, because it's very difficult. Unlike the likes of Forex, for example, where levels are very precise, the amount of volatility in crypto means your zones have to be plotted just ever so slightly bigger than the actual support and resistance lines. And that's why I've never been a fan of using horizontal lines for crypto, because although it will reach this region, technically, look at the spikes that are actually going through. You have a perfect test there. So let's say we get a perfect closure here. 1, 2, perfect, but bang, spikes through. You will have no chance whatsoever. Breaks through here, flies up higher, pulls back down. When you're looking at this level here and it taps and falls lower, you're not taking into consideration there are bigger zones at play here. Look, you actually could have caught that spike because it's already occurred prior within these regions before. So with me, personally, looking at this as well, yes, it does work valid, but look how much clearer a zone actually is to analyze a chart, and just makes life a little bit easier for yourself. So looking at this weekly time frame now, I use the weekly to maybe gather any further potential levels and make them a little bit thinner than, of course, these zones that are plotted here. Now that you know this zone is fairly big and there are wicks going below anyway, you can just take note of this, and it's very simple to do. Or if you really want, you can extend the zone all the way out. It all depends on your personal preference, but for me, I like to keep it nice and clean, and then just keep a little bit of a note in my head where manipulation can occur. So using this weekly time frame now, it's time to start building the floors of our house. The first level that sticks out straight away. Again, your focus in technical analysis should be on where the most wicks and candlesticks are closing together in synchronization. Not overall, I'm not saying there and there, I mean where they are closing together and they are repeating these same patterns again and again. If you are seeing candle bodies closing and wicks spiking to these same regions, it's just increasing the, I guess you could say, strength and validity of that level. So I'm going to draw this off here from the bat, from that wick, all the way over here. Let's keep that nice and tidy in line, and we can slightly adjust that to there as well. And all I do to keep this nice and clean, let's just say grey. Yeah, let's keep grey for now. So as you can see, spike, all of these spikes occurring in this region. Closure there, breaks below, closes, taps again. 1, 2, 3. Perfect tap up there, taps here, closes, bang, explodes through. Very key level for me. And again, if you want to actually do that little manipulative level just there, let's keep it nice and clean. Just below, that's exactly $6,000, give or take. Let's draw that there. Let's extend that out there. Again, it's all about keeping those charts clean, guys. It's not about trying to be Mr. Perfect or Mrs. Perfect. It's about keeping those charts clean. Can keep that into consideration, but actually, I will not do that just yet. I will now drop down to the daily, where things are getting a bit clearer. For some reason, is that gone to the back? Yeah, it has. It's just because it's not bright. Right, so first of all, when we are trading as well, now that you've got these main monthly and weekly levels plotted, when it comes to intraday, or even swing trading, it's best to focus, now your key levels are plotted, on the current price action. We do not really need to worry too much about minimizing our charts and having all of this open, because it's messy and it just doesn't make sense. We know these levels are now here. Even if you do not see those levels, you know you've plotted them from a weekly or monthly, and it's more than significant. So even if you're trading with just this price action, once you start plotting those intraday key levels of support and resistance, it makes life very easy. And once you've formed the overall construct of your floor and your house, you are going to be in very good hands. Now, bearing in mind, this isn't too easy for this specific BTC trading price, because the way I see this is in between here, here and here, we are technically in no man's land where not much price action has occurred realistically from around this region. So this current area we're in is no man's land. So that is why I am very cautious with a tight stop loss in case we see a sharp pullback, but I'm also prepared in anticipation, because look at this wick there, major market reversal. So if I just plot this here for the time being, the reason I'm anticipating an upside breakout is because if this did break out from this zone, the only real key level is of course there, and then the 6k region. Even where the wicks are, the candle bodies are confluencing around 6k in particular, showing it's a very valid level to explode to upon an upside breakout. But for now, let's just get rid of that. Do not need to use any of these so far. Again, this is good if you want to use the horizontal ray, I believe this is called. You can plot it from a specific level, so it actually starts from where you plot it, versus the horizontal line tool, which will just create a massive infinite line that never ends. And for me, that's just quite irritating. I like to keep things constricted in a certain region. But again, it goes without saying, using a horizontal ray is great for maybe marking one precise level, but the validity of it will never hold up precisely. There's always going to be spikes through, and it could even trick you. For example, you see a spike through or a closure below, it may trick you into believing there's a reversal when in fact you're stuck within a major zone. You may think this is a reversal point until you realize the actual zone is plotted just here where the candles have been conformed. So all these little things that I take into consideration, and you actually realize that although simplicity in the charts is extremely necessary, it does not mean it's easier. It just means you have to be trained to view a very clean chart. So it is technically hard to look at this right now and be like, whoa, this is so easy, there's so much price action, like here for example, where it was just choppy. That's why ranging markets for me are so easy to trade. But looking at this now, are we getting into this even further in terms of trend lines, etc. as well? We have a lot to get through and we could be here for a while, but I want to be covering absolutely everything, because from this point onwards I will start focusing Wizard Wednesdays on maybe specific lessons as well, not just covering market analysis and covering specific altcoins, because that's easy and that's done in the Telegram. I do think if I'm actually covering the Fibonacci tool more in depth over a next lesson, and then covering wicks and candles in particular, essentially giving you free lessons from a course that is going to then be fulfilled with even more content anyway. So I just want to give away some freebies. I'm in a good mood. The sun is shining in the UK, guys. It's sunny in London. Do you know how rare that is? No wonder your boy is in such a good mood today. So going to the daily, what do we see that's potentially threatening for where we are climbing? Because current price action wise, empty, very frightening territory. It's no man's land. What could be occurring? Well, if we go over here, we can use that wick there. We can see many rejections, and if we zoom in, we can see several candle body closures there as well. Major reversal point from here. But guess what? Using the crosshair and looking at the right hand side of the chart as I wiggle over here, look at the confluence from this level just here at $5,800. Let's scroll over. What's happened at this zone before? Oh, another wick. Oh, look at that. It rejected, it then closed below and caused a major meltdown. Guess what we have on our hands right now? Another level. Let's extend this over to around here. Let's get this nice and precise first to correlate with the other levels. So here's how I would draw this one. Precisely where that candle body is closed there. Put it on top of the wicks over there. You can see the congestions, the candle body closures. Lovely stuff to say the least. Now let's go over here. What do we have? 1, 2, 3. Closure, closure. What happened before it absolutely melted to the downside? It broke below this zone, tapped it one final time, and absolutely died to the downside. We now have the floors of our house secured. Now, what do we do? Because we're looking at these long-term trades, we have our nice levels set up, a nice infrastructure. Now we drop down to the 4 hour. What is happening on the 4 hour? Well, now that we're focusing on this specific price action, bearing in mind this stuff is nice, we can start plotting levels from here very soon as well, but overall it's not too necessary for now. However, before I get into that intraday stuff, I will actually start getting, no, let's go to the 4 hour first before getting into trend lines and whatnot, and just looking at identifying some more intraday key levels, because looking at this now, especially when we're looking at breakouts and anticipating what could be, you have to remember, in between these levels, before you can actually get to a potential support or resistance level, you have to look on an intraday and intraday basis to figure out what favor price is I guess you could say direction price is favoring as well, by looking at these price action movements to see if these key levels of intraday support and resistance are being broken, because to get to these levels, the intraday levels must be broken to, of course, annihilate a resistance level or smash through a support level, as a good example. So go into this 4-hour zone now. I can see many levels off the bat. I presume you guys probably can as well, but let's have a look at what's going on here. And I actually covered this in the Telegram as well and in the prior market breakdown video. We are essentially breaking through resistance levels, retesting and climbing higher. So I will mark them all out first of all, and then we will slowly get rid of them one by one. So key level there, resistance, broke through, wick, candle body closures galore. When it finally broke through, what on earth did this candle do? Pulled back, manipulative spike. Nothing you can really do about that, of course, by only having the prior levels marked in advance. Even then, it technically spiked through. Would have been quite hard to predict that, and unfortunately, that's just part of the crypto game. But look where the candle actually closed back above, spiked through, wipes out all the stop losses of people that thought they would be smart and buy off this movement here, spiked through, closed. Then you have confirmation, because not only has this resistance level, bearing in mind a major resistance level, fake spike through, pulled back, and again candlesticks are now trading around this region. I'll get to that very shortly as well. What you can see here is upon breaking and closing back above this new turned resistance turned support level, it is now confirmed this level has been spiked through, manipulation has occurred, and it's very likely we're going to see a reversal back to the upside. The next candle then tapped and rocketed to the upside once more. An excellent opportunity to gather a long move. Moving over to duplicating this. There we go. Let's now take this to the next level around there. Broken through, rejections. Bear in mind we're using price action, which is historical. So we've broken through, tap, 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 tap. Even from here alone, I guess after this has all occurred, you would know once you've broken and reversed from here and price is now rejecting this region, you have a nice long opportunity on your hands again. Stop losses, of course, back below prior support levels. And there you go, broken above, slams down. Where does it land? Exactly back at this level. 2 candles closing precisely here. Little spike through, nothing too threatening. Price explodes back to the upside. Now we add another level. Ladder. This is essentially a ladder within a ladder. It's almost like having a bedroom with extra bedrooms inside, so to speak. So you've got like ground floor, floor 1, floor 2, the roof, and then inside the house you almost have the stairs of the house. And this is what I see happening. Of course, when you're in a bullish intraday market or an intraday market, this will look more like an inclining staircase. If not, it will look like a descending staircase, although that doesn't make sense. I hope you understand what I'm trying to get to here. So once the next level is broken, price breaks through again, starts rejecting. Lovely, happy days, everyone is happy. Now we can duplicate this once more. Again, I would never leave this many levels on my chart, to be honest with you, but here we have it. So price breaks through, all kinds of manipulation now occurring on this staircase, but we finally broken through. What we do now is the goal here is to project and emphasize in advance where price may be heading next. So where is the most valid key level of current price action? Approximately. Let's go to the wick right there where we saw the past manipulation, because that is exactly where price is now drifting. Now 1, 2, 3, 4, 5, 6. However, look just below, candle body closures precisely in line with each other. I will now mark that zone very efficiently, change that to a newfound color. Let's just say green. Because it's a newfound level and it's a level that has already been fulfilled, but it has not been broken yet. So I consider this any key levels of support and resistance, for example, a newly found high like this, I do change the color just to signify what could be a potential breakout. And you can use this alone, guys, with this ladder to kind of decipher where price will be heading next, because you know, once you go to the monthly, you can see they come up just dots on the monthly. You're currently in no man's land in between support and resistance. You go to the weekly. Okay, we have a make or break moment where the candle's rocketed to no man's land. It needs to break. There's not many valid levels up here because we're not there yet. So you have to use the current price action on an intraday basis to dictate how it may be moving further. Once you dip down to the daily, there still isn't too much going on around these levels yet, as we haven't made it there. So we have to decipher what's happening on this basis to determine where price will go. So you can see very clearly now, this is why I always go back to the daily and the 4 hours, for example, to really get an overall bias. Because look here, if it breaks out, we know the next upside target is very easily there. If it breaks below, well, to be honest with you, although we have this support level here, the main level that it could fall to over a longer term period is down here, around $4,200. So it's a fairly critical level of make or break, but it makes your analysis much easier. On top of that, you can start using the Fibonacci tools, for example. I'm going to show you some little extra things as well. But the most important thing for me when it comes to plotting key levels of support and resistance, or finding out what's going on an intraday basis, like the 1 hour, you can dip down to the 1 hour as well if you want. I only use it to kind of monitor. It's more of a monitoring time frame for me, just to see the nitty gritty of what's actually occurring at these key levels. Even the 15-minute or 30-minute, not necessary, never ever try and trade these time frames on cryptocurrency. But when you're actually having a look at all the nitty gritties that are occurring, here's a good example. Daily, looking pretty good, very bullish. Going to the 4 hour, okay, we're inclining higher, very nice. Going to the 1 hour, what's going on here? Okay, we have spiked lower, and we are spiking higher. We are slowly forming higher highs, higher lows. We haven't necessarily dipped below this level just yet. We've seen a quick spike to this level and a push higher. Okay, so there is some fairly good bullish momentum occurring. We're looking at this level on the 30-minute, however. Okay, there's wicks that are rejecting this region. However, after pulling back fairly significantly, we can see if we actually got rid of this wick for 1 second and just imagined it wasn't there, you would see that it's still inclining. Higher low, higher low, higher low, higher low. Higher high. Now we need this leg to potentially break higher, form a new higher low, and bang, we can continue rocketing. Going to the 15-minute, you can see there is a bit of a restriction around this level. So when you see that occurring, you go back to this zone, you see the wicks are pulling back. And again, the wicks are a good indicator. This is where we'll now start covering some wicks. The wicks are absolutely crucial. The wicks are probably the most important thing. I don't really believe in actual candlestick patterns and recognition anymore, to be honest with you. I do not really look for specific like bearish engulfings or bullish engulfings or Maribozus or all these crazy things. They do not really mean anything to me anymore. I actually look more at how the candles themselves with the wicks are forming around certain levels, because they are the biggest telltale sign of what may be occurring next. So having a look at this for a good example, wicks breaching higher, wicks breaching higher. That doesn't mean anything, however, if it's not at a key level. If you were seeing this kind of significant wick movement at a crucial level of support and resistance, let's just say like here, yes, you're going to see a very significant reversal. However, when it's something random like this, it doesn't always mean it's too positive for price. Again, wick action occurring at that key level, bang, it falls lower. Same there, 2 wicks, very simple stuff, bang, it slams down to the downside. Now that this is occurring pretty much in no man's land, it's not too much of a reversal threat just yet. However, it is a good sign to take into consideration. When you are seeing these levels, you have a huge wick here. However, this was followed by another sharper wick to the downside. I know this could be deemed a reversal signal to many. However, it kind of annihilated the prior wick, technically invalidating that wick's potential reversal and showing that the buy orders and sell orders were not fulfilling enough to push price back up. So the way I see the candlesticks, and again, taking this into human psychology as well, and the overall market psychology and the collective consciousness of humanity overall who are trading the markets, the wicks are essentially showing you where the bulls or bears have lost the battle. You have to remember, the bulls and bears, they are not real bulls or bears like physical. Bulls and bears are me and you. We are the bulls and bears. When I am currently on that long position of BTC, I'm a bull. But then there's probably 7 million of you, or that was just a random number, but you get what I mean. There might be 10 million buyers, which could be myself and you guys, but then there could also be 10 million sellers. They're just average people, and you have to remember these are just regular people buying and selling. Well, I know we use these fancy words like bull and bears, breakouts and stuff. All you're seeing here is a bunch of people buying and a bunch of people selling, a bunch of people buying, a bunch of people selling. All you're seeing right here, a bunch of people buying. Now, what are these wicks showing? It shows that these buyers are really trying their best to push this price higher, but it's also showing you every step of the way. Here's where it gets a bit interesting now. My favorite part of this is using the wicks to your advantage. Is every step of the way, you'll notice, first of all, from this line here, with the first level that was pushed down, the bulls could not sustain. The bears from this specific level annihilated them, sent them plummeting back down. But guess what happened next? The bulls breached through this level. Now, suddenly this level may not be as strong as we originally think. Price comes back up again. The bulls are attempting to break through this region. The bears just push them down once more. Maybe this isn't holding up too well. Let's see what happens next. Bang. The bulls finally breach this level once more. Okay, so maybe the bears are not being able to sustain this specific level. So what occurs from this region? price absolutely annihilates. All I would do from this point is slowly start dragging this level up. And as you can slowly start dragging these levels up, as you can see from here to there, it just shows that the bears who were once here are being pushed up. It's almost like a game of tug of war. And again, this goes way further in depth in the course. It's all this stuff I'm working on right now, in the books, the videos, you name it. But just looking at this as a game of tug of war. Let's just use this level as a rope. Let's just say the buyers are here, the sellers are there. They're battling, they're bang. Right now, battling. Where will it close? If it closes here, shit, those bears are really taking control. But then bang, the balls push higher. And essentially it's like a plate. So imagine they're pushing this plate, so to say, not even a rope. So let's just say it started here, you're pushing those bears. Now this level, you're pushing them up. This level. The bears are just being pushed higher and higher. And essentially you're getting the balls that are just pushing this plate to the next level. And when it meets this region, the bears push them back down. And you're essentially seeing that battle just occur all day long. So for me, this is probably one of the easiest ways to physically explain what actually occurs at support and resistance level. So for example, when you see manipulative spikes, that's because these bears are already prepared for the worst case scenario. There are sell orders set there in advance, because for price to actually reach this level and push down immediately, that means the sell orders were already prepared. But guess what's happened? It's pushed price higher. Now we're currently rejecting this region because the bulls have essentially met their final barrier. For such a significant level like this to come into play, that just means the bears have set a crazy amount of sell orders here. Now we've finally pushed our way to this level. The bulls are just pushing. They're pushing this plate. Can they breach it? The bears right now are here. Can they push it back higher? Because the minute this level is broken, boom, price pops. Because like a game of tug of war or tightrope, or whatever you guys call it, I think it's called tightrope, the minute one army lets go of that rope and they finally lose momentum, the rope gives way, it flies. If you are, for example, pushing this plate and the people that are compressing you down all fall over, boom, this is going to absolutely rocket to the upside. So the importance of wicks is absolutely essential, and something that I think many people, do you know what, it's not even the price action itself, it's just understanding what the hell goes on in the charts and candlesticks themselves. And the quicker you realize it's just me and you controlling these candlesticks, of course not essentially, we don't have enough buying power to do so, but when you just realize that it is just human consciousness as a collective controlling these decisions through greed, etc., it's fairly easy to realize what's actually going on behind the scenes. And again, I can say this stuff all day long. It doesn't mean me or you or anyone will be right 100% of the time, because if we were, we wouldn't really need to be worrying about this stuff. You would just look at the chart, buy 500 lots. Oh, cool, I've just made $1 million today. Time to go bed. Time to have some Cocoa Pops. It's just, it wouldn't be that easy. But again, it puts it in your favor. The more you realize, again, irrational markets, look at that level. Because we never returned to that level, it was fairly clear we were not going to push and breach that level. The bears, they absolutely destroyed the bulls, pushed them back lower. That plate, so where's that magical plate gone? Okay, buyers, push, bang. Who on earth had sell orders there at $7,800 in anticipation? How could there have been potentially tens of millions of dollars worth for sell orders on BTC exactly at this level? That's called price manipulation. Because when you look at these levels, here's a good example. Bang. Sell orders, great, perfect, just what we needed. We finally attempted to breach this level again. They're pushing. Oh god, they're pushing. They've broken through. Bang, they've pushed the plate higher. There's another level now. The bears have pushed you all the way back down. You rejected. You're back at where you began. But this time, instead of having sell orders, you now have buy orders, as people have realized this level is broken, it's weak. So it's almost like putting down a flagpole after you've conquered your army. And I'm trying to use these real life ideologies and terminologies. I know it sounds insane. I am a bit insane, but it does kind of help. So it's almost like capture the flag in Call of Duty. Another great example. That was genius, actually. So your enemy has their flag here. You've breached their level. You've now taken their flag. When you actually go and get driven all the way back, you put your flag down to mark your territory, and then you slowly push your way higher. The bears are here. They are not giving way this time. 3 attempts. Damn, what happens from here? You are getting annihilated. Oh, look, they've broken where your flag was. Bang, back down. But guess what? What happens here? So we had buyers here, where they took the seller's flag, they put the buyer's flag. When they came back, those sellers had their flags ready. They dropped their flag here where they broke through your level. So when you come back up here, you've gone into their territory. They're not letting you back through. See you later. Goodbye. And that's essentially what happened. You had the wick break through, and then when the irrational, normal candle that wasn't manipulated came back, you got driven straight back to that flag and their territory, and they said, not today, bulls, it's time to go home. And they went home all the way down to there. So I hope that helps. I hope that does clear things up a bit. I know that was a bit of an insane way to explain it, but I actually think it kind of makes sense. So let's go to my next idea of trend lines and overall market trends. And I covered this with BTC overall, as I do believe after we fulfilled these specific levels, BTC could potentially drop back through $3,000. And the reason being is I use the monthly and the weekly to gain the overall trend. And we do that not even by trend lines, but just by gauging the higher highs and higher lows. A great example here is the overall long-term trend. We've been creating lower lows, low, 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 dipping a little bit, broken a new low. Now, because we've fallen so low, we haven't actually formed a new high yet, so we do not necessarily know where price will be heading. But all we do know is with the lower high, 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 getting lower every time, that confirms what we call a bearish market. So using this as an overall bearish market right now, the lower lows and lower highs forming are confirming we are in a bear market. And you can even use that arrow as a trend line if you really wanted to and be precise, but I'm using this for visibility's sake right now. Now, considering that the last prior high realistically was that swing, I don't consider it too much, but more so this level here overall, let's just say we mark this off here. Now, for price to technically be validated and confirm a new leg higher to breach and have a bull run, this level needs to be broken to actually break us out of a bear market. Because otherwise, if we close, let's just say this drives up to here, price drives here, but it doesn't breach this level, guess what? You've just formed a new lower high, confirming what could be another extended leg to the downside here. And with this current low here, you could end up here. Guess what? You've just created a new leg. So taking that into consideration as well, it's a very simple way of gaining the overall trend, but this also comes massively in hand when it comes to catching intraday moves, and potential swing trades as well. So let's just say the overall market is bearish. We know that. So it is more favorable realistically to be catching shorts versus longs. However, when you know that there is a potential new lower high to be formed, it does aid in your decision to realize, alongside using trend lines, that you can potentially catch future projected movements, and we'll get into that very soon as well. So going over to the daily over here, let's have a look at what's going on in the daily and what should have actually been a telltale sign for myself that I currently missed for an upside explosion. Let's just have a look at what's been going on here. Let's duplicate these very quickly. That's our first swing low after a major downside movement. Where does the next low form? Even higher. Okay, we have a higher low going on here. This is interesting. And again, essentially there, but I just consider it there. That's where more of a swing occurred. And there, and there, and essentially the stepping stone ladder that has been forming every step of the way. 1, 2, 3, 4, 5, 6, 7 inside our house. How, guys, have a look at this. We have the floor. Drag that little bad boy up. We now have our intermediary level. How are we getting to the next level exactly? We are taking the stairs. 1, 2, 3, 4, 5. We have reached our new level. It looks like, again, pushing that plate, the battle's occurring. Essentially, these people are just walking up the stairs. Bang, I want to go to the next floor, please. No problemo. Let's just break straight through and go to our next floor. What's occurring? Again, using these wicks as guidance, especially on a daily time frame perspective, guys. Even with this kind of consolidation you see here, with the wicks all congested, you can kind of use how they're moving to dictate where price could be heading next. So 1, 2, 3, bang. Cool. Looking at these 1, 2, 3, 4, 5 candle wicks slowly decreasing over time. Not always guaranteed, but it does help with the overall trend bias as well. As you can see, 1, 2, 3, 4, 5. Overall, they are slowly progressively getting lower. And then the highs as we start climbing higher. 1, 2, 3. All you've got to do is wait for a candle closure. And if it's definitely higher than the other one, it's looking pretty promising. You're going to see a fairly significant movement. Using this 1, 2, 3, 4, 5. Even though they are irregular, they are slowly getting lower over time. And a spike like this normally confirms that you're about to reverse, and then they have just wiped out stop losses of people going short, and then price absolutely dumps. So this terminology as well, I believe, is massively helpful, just seeing that we're climbing higher to the next floor, and it can happen many times over, all over the place. Now let's get another good example here. All these people are really doing is taking these steps to the next floor. Because essentially, even though this is a bit of consolidation, it has been slowly inclining higher. As you can see there, the final tap, it's just been climbing its way to the next floor, and you can start seeing that over time. So when you're using the daily time frame in particular, and you want to catch those swings that are around $300, $400, which is very significant, especially when you're margin trading, you are giving yourself huge room by using the daily to capture these moves. Like, let's be honest, when I day trade sometimes and I give these calls, this move from here to there is almost $200, $300. Like, on a daily time frame, I know it doesn't look significant compared to these kind of moves, but when you're margin trading, these are significant movements. And you always get the haters and the doubters that say, oh my god, you're only catching a 2% move in the market. Well, guess what? That 2% with the likes of 1 to 2 or 3 lots could potentially make you 5k. So it's very good to look at these in a much more logical perspective. So looking at this right now, the reason I'm pretty confident, again, a bit of consolidation here that isn't making me too happy, but overall, looking at the downside of these wicks as of present. Again, I guess this is kind of helping with the current BTC analysis as well, actually, just doing it from scratch. Closure there, closure there, closure there, and there, and there, and the ladder is being formed higher. 1, 2, 3. We are just climbing higher. Where will it end next? And again, when you actually start looking at these levels, you realize they correlate with support and resistance as well. Let's just drag that up there, drag that over there. Even if you dip down, once I finish this off, so let's just say it dipped there, extend this out as well. That can be extended out to there, because don't forget there's no much, 1, 2, 3. There we go. And let's extend this out. And what you'll notice is when I go to the 4 hour, there'll be a pretty strong confluence with these levels and how they're reacting to prior price action. 2 candle bodies closing there, which is normally a pretty good sign of a reversal. We've had 2 candles close there, 2 close there. The overall trend is technically up, so I am favoring this closure more than this reversal closure, although we are still seeing that plate failing to push. When you now drop down to the likes of the 4 hour, and again, this is messy, you would never do this, but it just goes to show the validity of those wicks that have been closing on a daily candle, and you look at how many confluences there are on the intraday timeframes and intraday timeframes. I mean, going to the 1 hour makes it much more cleaner. Guys, price is just bouncing between these daily wicks as they incline higher or lower. I mean, it cannot get any more simple. If you even wanted to scalp the market realistically, these levels just do not stop coming into play. And although they bounce back and forth over an extended period of time, we are progressively climbing higher. Looking at this 1 hour candle now, beautiful. If it's tapped into that region, mark this up. Broken above, rejected, huge spike, potentially being a stop loss hunt. This could just annihilate. That is why I'm just getting quite impatient now, because I want to see these levels absolutely broken, which would be amazing to see. So let me go over here and start cleaning up this chart a bit. So we do not need this for now. I believe that's covered the wicks and the overall trend more than enough, using higher highs and higher lows. It's time to start. What should we do next? Shall we do trend lines? So trend lines. Trend lines are good. I love trend lines. They are essential. They come in handy. However, they are a bit different to the likes of Forex and stocks. And these are on a, I guess you could say, case-by-case basis. They are different in every other way. Sometimes they can be from, this is just like the Fibonacci tool as well, by the way, which I'll get into. They can sometimes be from body to body, wick to wick, or body to wick, wick to body. They can be in many different variations, and it's up to you to really determine how they are unfolding. And that's why many people fail in the cryptocurrency market, because they're not looking at trying to understand why it's different. And this is something I actually covered before in many videos, which is obviously in a course I did not release to the public, but I want to release some of these insider tips and tricks, because many of you guys did not have access to my content before, and now I'm just going to give it for free. So let's have a look. Trend lines here, for example, wicks to wicks. Does it make sense? Yeah, potentially. I guess you could say that. Does it make too much sense? No, because price has never really reacted there before. In a worst case scenario, we see a downside spike, and let's just say we see the analysis come through. BTC hits 6,000 and then pulls back down to 6k and below. You best believe this trend line will come exactly into play, but for now, it's not necessary. It's way too far away from the current price action. What does make sense, however, so again, you can do these on a case-by-case basis. If you want to do body to body, yes, they do work in terms of strength and validity, but they are not clean, they are not precise. I prefer to always use the wicks, or I prefer to use an extended version. So here's a good example. 1, 2, 3, before. The candle body, although it spiked through, it closed exactly there. That's a good enough confirmation for me. However, with that manipulative spike now in consideration, let's have a look at what's going on here. Instead of drawing it there, we now have a new movement, so we extend our trend line to the most relevant level. And what I'll do from here onwards, 1, 2, future price manipulation. Let's go to the daily and see how it reacted. Well, would you look at that? The big manipulative spike somehow correlated perfectly with the trend line drawn from the past manipulative spike. I mean, it literally speaks for itself. It's easy to predict manipulation when you know where manipulation has occurred before. If you're drawing trend lines upon the wicks that are obviously manipulated, you're more likely not going to catch moves that were manipulated again in the future. So that's something to take into consideration. Trend line retest, very simple stuff. Let's just say sharp downside breakout does occur. Also as well, boxes and ranges whilst we're on trend lines, because markets can not only go down, they can also go up. But on top of that, trends are not just up and down, bullish and bearish, they're also consolidative. Is that the right word? Consolidative? Or they just consolidate basically. They are range bound markets. So what I'll do here is, instead of drawing from there to there, I'll draw it from the last swing that correlates. For example, you could draw here. Again, another clear reason, guys, if I may add, where this major level, which was a trend line here, could spike. Now that I've seen this realistically, maybe $7,000 is a shot. You cannot rule it out because you've broke below and it's never been retested. And trend lines, 95% of the time, are always retested. It cannot get any clearer than this. 1, 2, 3, trend line broke, nice rollover, tap. And even if it hits here, let's just remember the prior swing high is there. We would be hitting around this region here, maybe spiking 7,500, who knows? Would it breach this high? Nope, which means all the way back down. Very simple stuff. Now, getting on to the range bound side of markets as well, you have to remember the best way to do this is on the daily, especially for BTC. The market, although it's moving up and down, it's still always moving within certain constricted range bound zones. Now, if I just start clearing these out, this is also a very long video. However, I want to get everything covered, and I want this to be the video you come back to. I want this to be the video you show your friends, the video you refer back to whenever you're confused, because this will essentially be your technical analysis Bible for cryptocurrency. And I cannot wait to show you the actual more advanced stuff, dipping even further into all of this content here. But I am throwing some cards on the table that I do think many people deserve to see. So trend lines, again, you can of course use them on an intraday basis as well. Again, you can cheat, and that's something I showed you. You can do the cheating method, but looking at these wicks below doesn't make me a very happy man. So I extend them out, because you know when there's a huge manipulative spike, boom, you have the external trend line in play. Because the average person would simply just go like this, to be honest with you, or just do some weird crazy stuff, and it just wouldn't make sense, because the minute it breaks, you would be like, oh my god, short. But realistically, there could be the wick to the wick. So you actually know, even though it didn't break there, it could just be tapping here and then climbing higher. So you can do stuff like this as well, the external trend line and the internal trend line. And again, if this breaks, you know you've got an easy downside target of the next trend line. Not necessarily to trade from and catch a short, but to catch a potential long. Because it's going up, it's in line with the overall trend. Very easy stuff to see. Now, this gets me onto range-bound markets and what's occurring on a daily time frame perspective. Why is this level make or break? Well, because we're currently in a box. Broken in, 1, 2, 3 candles constricted within a box. Breaks out to the upside. Here we go to 5,800. Breaks to the downside. Next level is around $5,000 just below. Either way, you can see very easily what's going on, and you can see this occurring throughout the market on a daily time frame perspective. 1, 2, 3 broke below. Oh my goodness, goodbye. Let's have a look at what actually happened on an intraday basis using the daily time frame. Once it goes to the 1 hour or the 4 hour, you can see things a little more clearly. Huge constriction, price broke through, broke out again. You can actually use these boxes as well to kind of fix up potential stop losses and the likes. So let's just go to this, because it's pretty interesting. Now, once we adjust this a little bit more, you will see something very interesting that could have actually allowed you to catch the entire move to the downside, give or take. Now, broke below, came up, didn't retest, but although that would have been pretty significant after closing like this, easy, stop loss just above, not where the prior spike was, because that's false, above the prior wick. And what would have happened from there onwards? Goodness gracious me, it would have been one hell of a fall. And you can actually use this all over the daily time frame before then dipping into the intraday time frames to catch a potential movement. Let's just say this happening in real time now. Couldn't get a better example. Same occurred here realistically. Broke out that box, rejected, bang, flew to the upside. So as you can see, 1, 2, 3, breakout, bang. Hopefully we can see a very similar movement here. Breakout, taps down this level once more, and we start flying to the roof. Same could also be said here. Broke out, closed, boom, straight out. Very simple. That's all I really need to cover from that aspect. However, there is another element to the chart overall. So as you can see, we're currently range bound between support and resistance. Although we are inclining, as you can see, price is range bound between certain key levels. So what I will show you for this very interesting piece is, let's just say from here or there, although price is technically inclining higher and consolidating and breaching higher, the overall price action is occurring in these levels. Breaks below, rejects, breaks back through, touches, breaks through, comes all the way back down to support, breaks, retest, flies, falls down to support again, flies up, touches support, flies up, touches resistance, bang, support, bang, resistance, bang, support. Halfway, bang, it absolutely falls. So even on a basis, whoop, I just almost knocked over the mic from excitement. Even if you go to the likes of the 4 hour time frame, look how easy that is, guys. Bang, support and resistance, bang, support and resistance. You are trading a volatile market while still trading it in ranges at the same time. There are so many times this occurs in the market overall. Look at that massive box there. Breaks out the box, touches, bang. You can even do it there, realistic if you wanted to as well. Again, a bit of a messiness outside, but when you dip down to the 4 hour, can see a bit clearer. That's what it done was. Very similar. Touch, support, resistance, breaks above, rejection, falls back below, comes back in, taps support, falls back above, resistance, support, taps, 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 falls down with the main key levels in play, bang, taps, flies up, falls back down, breaks, rejections, tap, 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 goodbye, see you later. So again, just another way to actually easily see how this is moving. And we're going to finish this off now with the Fibonacci tool and another little cool feature that I use to predict future price movements and specific trades for BTC in particular. Now, before we get to the fib, I'm going to draw 3 boxes starting from $7,000. We're going to make this box green. We're going to make this box purple. We're going to make this box something more jazzy, like a orange. Very nice. 3 boxes. Now you're probably thinking, what is this guy doing? Has he lost his marbles? You are absolutely right. Yes, he has. However, this works, I can assure you. Let's start this all from an equal level. We will start this from $7,000. This box will finish at $7,100. Interesting. Very small. This starts from $7,000. This will finish at $7,200. What is going on here? Very strange. What is he up to now? $7,000 once again. This time we finish off with $7,300. Here we have 3 boxes in precise increments of $100, $200, and $300. Now, this is something I picked up and I wanted to actually keep for the course. However, I thought, why not? Let's just throw it out there anyway. So, dragging these boxes, making sure not to adjust the length, height, width, for example. You can actually use this to predict the average approximate movement of price. So the more you see, and this is a good thing to do, the more you see price moving in these certain restrictions, and again, look there, from the upside to the downside, from the upside there to the downside here. It's almost essentially in $300 movements. And you know once it breaks, it's going to be a very significant breakout. Going to current price action here. Not too bad. Not too bad. Let's drag this here. So the more you see, so especially when it comes to consolidation in particular, the more you see price conforming to certain price constriction movements in certain increments, you know it's more likely to mirror it again. There, there, there. Perfection. Broke out from there. That was a fairly big move, to be fair. What about here? Perfect. Upside. Perfect. Downside. Perfect. Very simple stuff. $200 increment. Perfection. 1, 2. Bang. Price flies. Now, as for this one, $100 is good for catching more of an actual zone in $100 range. or for doing more of an intraday analysis, to be honest with you. Using little things like consolidation that's tight like this, you're more likely than not going to see it moving, as you can see, in $100 increments. So the market is consistently shifting from $100 to $300 increments, from 1, 2, and 3. And judging from how it moves in that specific zone, you know it's more likely to break out bigger once it finally does. Look at that, guys. Currently restricted in a $100 movement. Where were we before that? A $100 movement. So all we need now is another breakout, and if we drag this upwards, that's $100 perfectly right there. So that pretty much speaks for itself as well. And to finish off this Goliath video, honestly guys, I really hope this is helping you, because I'm just throwing out cards on the table left, right, center here. The Fibonacci tool. I will not take too long to get into this, but the same principles apply on a case-by-case basis, and this looks like an excellent 61.8% golden ratio retracement. Having the Fibonacci tool plotted, what are the levels I use? I'll just throw these out as well. Of course, the 1 and the 0 are your starting points for the swing high and swing low, vice versa. My retracements, you may notice in the world of Forex, for example, many people... Actually, whilst I'm here, let me just check the trades to see how it's actually looking. $2,360. It's not too bad, is it? Hopefully we can see. Again, drop into the thing. 30-minute, this rejection level broken through. The stairs are forming. Not too bad. Let's hope that 4-hour provides some absolute magic for all of us. But yeah, also if you are using margin trading as well, make sure to use the MC4 platform with Hugo's Way to give yourselves a little bit of leverage and see if the charts are actually aligning with each other. Because although we are constricted at this resistance right now, you can see a slight increase because the candlesticks differ a little bit. You can see they're slowly climbing higher, which is nice to see as well. Now, back to the fibs. We have an extension targets, which I use for profit taking and knowing when to potentially enter another position. Minus 0.27, minus 0.618. Of course, 618 being the golden ratio of Fibonacci. Now in Forex and stocks, they normally have the 28.6 and also the 50% retracement. That doesn't work too well in a volatile market like cryptocurrency. So after a lot of backtesting and strategies, I eradicated, and I've been doing this for maybe 2.5 years now. You guys that have been following me would know this anyway. I have eradicated those two levels in between and kept the most high probability efficient levels available, those being the 61.8 and the 78.6. This provides more accuracy and saves you trying to catch reversals in between where they are not going to hold up. So these can differ again, as I said, from the wicks to wicks, the bodies to bodies, or wicks to bodies. It really depends on how price is currently reacting. So as you can see here, that's fairly confirming for me. A rule of thumb, by the way, guys, when it comes to Fibonacci is, if it falls just short or just above, that's still valid as a Fibonacci retracement. I know many people look for precise touches to confirm it, but more likely than not, in a manipulated market like this, when you consider what I've already told you about the market manipulators looking for anything that's too perfect to use in their favor to pretty much destroy you, you have to think like that. So the way I look at it is, I'm looking to catch myself out as a trader. Price falls just below, but it hasn't hit the fib precisely, but there is a pretty solid level. But what happens if I actually just drag this down to the body? Perfecto. Very simple stuff. Body to wick. That came through very valid. Looking at how prior price action, and again, this is a great tip to use. Look at where the Fibonacci levels have lined up before. They're lining up very well. 1, 2, 3, 4. As you can see, that cannot be more valid as a prior level. It's now aiding me in my confluence to not only, especially once you've seen the reversal, you could catch along straight to that target, bang, done. If not, wait for it to meet here, short. If you see this level up here, which is still very valid, stop loss just above, catch a nice long swing. Where is the Fibonacci extension target to? Minus 61.8. Where did that candle spike precisely to the Fibonacci tool? So I'll try and find another case basis. Again, guys, this can be used even on the current price action as well. So for example, here's why we could be seeing a nice rocket ship coming our way very soon. I believe it's this level here. A, B, C, D. As you can see, using the A, the B, fibs galore being tested like no tomorrow. Tapped reversal. We have technically reversed from this region, which means there are some nice upside targets in play. And also, bearing in mind, we know about this floor. That shouldn't be orange. So let's just say we know about this floor that's being battled to push. Well, guess what? If these Fibonacci targets get broken, this is being broken through, and suddenly the bears have lost even more momentum because this level no longer matters. What may occur, we may pull back. We will now plant our flagpole here and secure the buy orders. The bulls will place their buy orders here ready because it's no longer the bears' territory. It's ours for the taking. Now that that's occurred, what could potentially happen? You can use the Fibonacci tool to project where price could be in the future. So considering this is the ABC, I will now drag my new A point to around here, give or take. And let's just say we drag it up to, wait, where was the original target? Sorry, I've actually forgotten where it was. Okay, let's just say around there, 5461. 5461, we'll drag that up there. Drag this up to this potential point here. All you know is when price falls back, it could potentially fall back down to here, but guess what, it's now going to incline, and look at the nice alignment there, 5,633. Of course, this doesn't always work. When price is choppy like this, it does follow it, and that's why it takes several days to see price incline higher, because you're watching it swing from A, B, C, D, A, B, C, D. However, when a breakout occurs, this will be annihilated and price will just fly straight to the overall longer term targets. Now guys, I'm going to leave you on that note, as this has been a very in-depth lesson, and I think there is many more to follow from here, whether that's little tips and tricks, different ways to analyze the markets, and little things that I've uncovered. Now please remember, this is just a surface level of what is actually being provided within the Crypto Wizard course, but I do feel this is necessary to provide a bit more of an advanced approach and things that I've never seen many people, I don't think I've seen anyone actually cover crypto analysis like this for free, and to actually aid people to learn how to analyze the markets. Because even if I teach you the basics, when you're actually watching my analysis, you may still be a bit confused. But hopefully now with this, you can actually go back to the drawing board, practice, and just wait until I unleash the real deal. And I cannot wait to do that. But for now, I will remain silent, and I will allow you guys to hopefully aid your technical analysis journey. So guys, on that note, I hope you've enjoyed this episode of Wizard Wednesdays. I'm hoping this has been the best one so far. A lot of effort has gone into planning this and hopefully helping you guys in your journey to becoming successful traders and long-term investors. So as per, I'll be seeing you in the Telegram very shortly. Have a great Wednesday.